guys, your boy SMK. I'm back with another video. Slight consistency. Guys, listen, make sure you're watching, bro. Make sure you subscribe, all that good stuff, man. Slight consistency. Today's video, guys, we're actually going to be going over a breakdown. This breakdown is going to be basically 3,030 minutes. Some of you may have seen the short that I did put up on YouTube Shorts as well as TikTok. But if you haven't, this is going to be the full breakdown. I'm going to go into details. Hope you guys are enjoying these videos. I got a lot more stuff coming out. Make sure you join our free Telegram. I'm going to be dropping stuff in there daily from now on. Actually, not daily. Let me say that every other day, basically. So look forward to that. Yeah, guys, listen, enjoy this video. Make sure you like, subscribe. I'm going to catch you guys there. Said 3,030 minutes. Let's get it. Alright, guys, so on the chart now, we're going to cover the position. Now, really and truly, guys, I'll be honest with you, this position was really just kind of based on the 1 hour. It was a very quick intra-session trade. So the first thing I know is obviously that price was going to the downside very heavily. Okay? If we look, you can see they have this strong bearish push to the downside. Price was just going down. So the anticipation is price should keep going down. So at that point, what I need to really do is figure out where is price going to start going down from. But the first thing I always recommend to every single person is use your Fibonacci. Not because Fibonacci is the end all be all, but just so you can get yourself some sort of range in terms of where premium is and where discount is, etc. Right? So first thing is first, you want to make sure that the supply zones you're looking for are above 50%. You don't want to sell above 50%. As you can see, as of right now in this particular market, 50% is here. Okay. Any point at this point in the market, price can start to go to the downside. What I want to start doing is looking for potential points of interest. Now, points of interest I actually chose at the time. One of my first point of interest was this level here. I'm going to have is up here, but that's not really important for now, so I'm not going to go over that too tough. So the reason why I chose this area is very simple. You see that we have the structure coming to the downside. We have high, low, lower high, lower low, lower high, then middle, lower low. You can see that these are the levels that actually got broke by this specific area in price. We had this large imbalance that wasn't completely filled by this particular area over here. I know, okay, cool. Price has potential to actually want to go up to the supply zone before moving to the downside. I have a target for myself for the day. Once I have my target for the day, what I need to do now is very simple. Go to my lower time frames and make this trade happen. Come to the 3-minute time frame. Understand that the day is actually going to start over here for me. The structure I'm seeing coming into the day is this: low, high, higher low, higher high, higher low. After this higher low, I'm of course anticipating a higher high. Everything within this is just the range. We understand that after consolidation, there's always going to be an expansion, one direction or the other. How do you figure out the directions where most traders go wrong? You figure out your target, you work your way from top to bottom. By the time you get to your lower time frames, you understand what the lower time frames are trying to do. So I understand I have a supply zone, so I know price needs to go up to my supply zone. I'm looking at my structure coming into the day, it's bullish. Even though price is consolidating right now, I don't need to be confused because I understand that the whole purpose of price and everything that it's doing right now is to get to the upside. Now, before price goes to the upside, when we get consolidation, and I understand this, that when price is consolidating, it is always trying to do something, either accumulate or distribute. If I want price to go to the upside, I'm going to be anticipating accumulation. What does that mean? If I'm seeing liquidity sweeps to the bottom side, which is taking out preemptive sellers and early buyers, and I'm seeing break structures to the top side, that is my indication price is going to be going to the upside. I should try to look for a position to get in. After we had this bullish structure in the market, followed by this consolidation in the market, a few candle, and then break to the upside, I knew I wanted to just find some sort of entry to get in to go to the top side. As you guys can see, if we look from this low to this high, we're at this level of imbalance literally right here. This area became my demand zone. I really wanted to enter right here, but by the time I was ready to put details into my MT4, price was here. So what I did was just mark execute. And my mark execute price had a nice push to the upside. What did it do? It created liquidity to the top side, equal lows to the downside. Price then took out those equal lows and left the equal highs as a target. And then price shot straight to the upside. Now, in terms of my target, the reality is for this trade, I was actually only targeting these levels. You see, the risk draw that I was actually targeting, just as a first TP, was this level right here, which was a 1 to 3. Now, because if you go to the 1 minute, you can see how aggressively price moves to the upside. I ended up getting an extra bit of risk reward. It ended up being a 1 to 4.87. No, 4.7, sorry. So I actually was able to make a little bit more from this trade. At that point, then obviously price got close to supply, and then we had an aggressive push to the downside. But that was literally all that I took, guys. If it comes down to your inter-session trading and understanding your liquidity, understanding your targeting, this is all it comes down to. Figure out your high time frame objective. How's price going to get there? Watch out for consolidation. Liquidity is getting taken out, and where liquidity is being left for targeting. Follow your structure and enter with a smaller stop loss possible. You see the 5.3 stop loss. You see the 5.3 stop loss. The smaller your stop loss, guys, it is, for me personally, like people's charts, it lets me know how much understanding you have. Bigger your stop loss, the more ambiguous it is, the less you know, the more you need to go in. All right, guys. Pumping up, guys. Listen, have a great day. Make sure you like, subscribe, all that good stuff. And I'll see you guys in another video.